Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, profit taking emerged Thursday and into Friday after the Australian dollar briefly inked in a 3-year high. And with the rising cross-market volatility also knocking risk sentiment and triggering a pullback, the move now comes as investors grow uneasy over the stretched positioning, possibly, and renewed fears of a US government shutdown after Washington failed to clear another big budget hurdle. Meanwhile, the Australian dollar continues to find underlying support from a firmer than expected Australian inflation, which has pushed markets to price in a greater move of around 60% chance of a near-term rate hike, which is viewed next month, thereby reinforcing the Aussie's appeal. Still, the data confirm inflation pressures remain persistent and broad-based, keeping the RBA on alert. The US side gains are capped by a steadier US dollar after the Fed held rates this week around 350 to 375%. Along with that, market is still a bit nervous as President Trump downplays the US dollar slide and signaled plans to nominate a new Fed chairman next week, keeping political pressure on monetary policy in focus. So as you can see, the market is in a pullback and the first support comes in around 69.65. Could find support just a little bit lower from there, around 69.25, but overall, once this pullback's been achieved, I feel the market is going to look back to the top side of the range, somewhere around 71 cents. The euro also in a bit of a pullback here. As you can see, the market's taking profit and also knocking the indicators out of the overbought zone. Keep an eye on the support, comes in around 118.65 to 118.10, and I feel from the correction of this pullback, may look back towards 120 to 123. While dollar yen is very stubborn. After taking a huge drop from 159 down to the lows around 152, the market is again attempting to recover. Let's see how long this lasts, because the market will again may find possible risks of intervention, and if so, overall looks towards 151 as a potential target and reassess. Pound is also finding a little bit of profit here. I'm not going to get too bearish on these markets. Only corrections are called because they are overstretched and therefore could see a pullback to 137.35 and reassess in case we get the bounce. Gold, well, the market has been very, very whipsawed after hitting the peak around 5,600, has dropped $500 to the lows around 5,100 and now bouncing back to 5,200. Very whipsaw. And the risk of this drop, you can still see the trend is a long, long way, around 4,550. So no doubt, as this market is well elevated, whipsaw price action, and still possibly keeping a bullish call to 6,000 for this year. So it's broadly, the market could actually pull back anywhere in this gap, but still the bulls will defend, and no doubt bargain hunters are still lurking. And wrapping up with oil, it exceeded its targets all the way up to hitting 66 and now pulling back and likely to see a little bit more as all eyes turn to the OPEC this weekend. Let's see how the market plays close towards the 62.60 support and if we get a challenge back to that 66 area. Well, that's a wrap. Thank you for joining me. As always, look out for the intraday report. I hope you enjoy the great start to the new weekend.